HIMS and HERS is expected to report their second quarter earnings on August 4th after the bell. The stock has been an absolute roller coaster, and over the past 3 months, they've had some killer execution. They've had a completely new management team, they've had an acquisition, and they've had 30% plus short interest. The stock has been going up and down. And this is a moment for us 4 times a year to check in on the fundamentals, on the growth story of the company, and on the financials. And so in this video, I wanted to provide my earnings predictions for the second quarter for HIMS and HERS. Let's jump right in. Okay, so as you know, HIMS is now my second largest position. I'm very invested in this company, to say the least. And generally speaking, I'm very bullish regardless of the volatility in the company. So I have all the numbers laid out here. And in this spreadsheet, we're going to walk through them and I'm going to explain what I'm expecting for HIMS. We're going to start off first and foremost on the subscriber counts, 2.4 million subscribers as of their last quarter. I'm actually expecting them to drop in terms of their non-personalized subscribers, and I'm expecting them to increase in terms of their personalized subscribers. Personalized subscribers have had triple-digit growth rates. If you look at these year-over-year numbers here, you can see that HIMS subscribers are growing at an insane clip, just triple digits across the board. Now, of course, that growth rate is going to fall because that's just unsustainable to have levels of growth that are that drastic. I'm expecting about 15% quarter over quarter growth for personalized subscribers and 105% year over year to 1.61 million personalized subscribers. Now, in terms of non personalized, I'm expecting this to fall. It's been plateauing over the last several quarters. And in fact, this is deliberate because personalized subscribers are the moat of this business, and management wants to push more users into their personalized subscriber segment. They have about a million non personalized subscribers, but the prices for non personalized and for personalized are pretty much the same. So the management team is actively trying to push more people there. This is why you can see some negative growth rates year over year here on a yearly basis, simply because a lot of these users are just migrating over to this personalized segment. And we want that to happen because the personalization aspect of HIM's business is their entire moat. Users can have personalized treatments, and this is something that will keep them in the ecosystem for years to come. It will allow them to not churn. So from a total subscriber perspective, I'm expecting 2.6 million subscribers. Now, you might be thinking that this is a slight acceleration in their members, but it's still within the feasible ranges that we've seen over the past several quarters. Typically, quarter over quarter, we see high single digits here. And if we look year over year, I have it here at 39.4%. Last quarter was a little bit lower at 38.4%. But if you look at the last year, it's been in the 40% range year over year for the total subscriber count. Again, it's all driven by this personalized year over year growth because personalized is increasing triple digits. The other thing to keep in mind here is the percentage of personalized subscribers to the total subscribers. Of course, this percentage is going to drastically increase because if you're growing personalized subscribers by triple digits and you're actually declining in non-personalized subscribers, then you're going to have a mix shift that's drastically different year over year. In Q1 of 2024, we had about 35% of the total subscriber pool being personalized subscribers. That number has since increased to now being 59% as of the latest quarter, and I expect that to continue to increase. I forecast that 62% would be the percentage of personalized to non-personalized subscribers. And much of this is for the same reasons that I mentioned above. The management team is actively trying to push more people into that personalized segment because that's effectively the business's moat. Let's move over to some of the financials here. I'll talk about the total revenue first and foremost, and then go down the income statement. So total revenue can be split into online revenue and wholesale revenue. And it's a little bit of a similar story here with the subscribers because online revenue is the segment that's growing very drastically, whereas the wholesale revenue is plateauing and it's not really a big impact to their total revenue. So you can see the wholesale revenue here is generally around 10 million per quarter, whereas the online revenue is increasing drastically, 267 million as of Q1 2024, all the way up to 576 million as of the last quarter. I put it at 629 million for online revenue for this quarter, which of course, if you add 11 million in wholesale revenue, which was my forecast, the total revenue comes up to 640 million. 9% up quarter over quarter, and 102% year over year growth, which is still amazing. If you see triple digit growth anywhere, I mean, keep in mind that that's not necessarily going to be always sustainable for the business, but it's fantastic to see. But why is this a slower growth rate than what we saw in Q1? Well, I think Q1 was kind of an outlier quarter to some degree. First and foremost, let me mention that my estimates here are higher than what management is guiding for, and they're higher than what analysts are guiding for. So let's cover that first, and then we can jump back into these numbers. So my number was 640. Here you have some analyst estimates, and analysts for this quarter are expecting 550 million. So my number is about $90 million higher than what analysts are expecting. And the EPS forecast is 15 cents from analysts. We're going to revisit this number as we go a little bit further down. But here we can take a look at HIMS' own projections that they had last quarter. They expect revenue to come in at 530 to 550 million. So not only is the analyst forecast about 90 million off of my number, but actually management's number is about 90 million off of my number as well. My number is really very, very high. But here you can see that HIMS really always beats their numbers by a very healthy margin. You can see the revenue surprise here is generally very high single digits. Now, of course, a 90 million beat would be even higher than this. It would be double digit beat on what the forecast is. And one of the reasons why is because the business is accelerating drastically. And they're, in fact, accelerating in many areas. They're reinvesting in the business. They have international expansion and they have all of these other prospects. But my first impulse was to even have this number be even higher. And one of the reasons why I don't have it even higher was simply because the GLP-1 revenue, which was in shortage in Q1, will no longer be in shortage for the following quarters. And so that was the reason why I put 640 and not, 650 or 660. But I don't really see them being down quarter over quarter despite this. This is, of course, the first quarter after the shortage ended. So we'll see how the business does. And that's going to be one of the main focuses of my questions for management is really how they're looking without that shortage. Now, of course, this number that I have forecasted here for total revenue could be completely out of the range of possibility because, in fact, HIMS could come in at a decline quarter over quarter and report, 560 million, and they would still beat analysts and they would still beat their own range and all would be well in the world. But I think, in fact, that they're going to break that 600 million in total revenue. It could be lower than 640. I mean, just look at the trends that you have here with regards to their other growth rates, quarter over quarter, year over year. This is still a decline based on those trends, but it's still an acceleration based on what the forecasts are, both from an analyst and from a management perspective. So we'll see where they come in for this quarter, but this is going to be one of the big numbers that I'm going to be looking for and just seeing how that shakes out from a segment perspective and how big of an impact GLP-1s are to that segment. Now, in terms of the gross margins, I have 75% gross margins. We saw margins really decline in Q1. A lot of the declines in margins have been related to GLP-1 revenue. And so I'm having a bounce back in margins here, obviously not as high as they have been historically speaking, but slowly inching back upwards. I'd be surprised if we saw margins continue to significantly decline. Now, of course, if GLP-1s are a massive portion of their sales, which I don't expect them to be as a result of that shortage, but if that were the case, then margins would continue to decline as a result of that. But since the shortage is over, I expect the revenue from GLP-1s to be lower, therefore the margins to go up as a percentage of the total. In terms of adjusted EBITDA, I have that at 88 million here, and that's fairly in line with the EBITDA margin that they have expected. Management here is guiding for 65 million to 75 million in EBITDA at a 12 to 14% margin. You can see this here. And I have them going above this range. So I have 88 million versus the 75 million, which is the top of management's guidance range. I do have them, however, falling within that 12 to 14% EBITDA from my number of 640 here. And you can see that the EBITDA margin is fairly in line with previous quarters, but the reason it's not higher is because I'm expecting a higher level of expenses to the growth investments that they're making into the business. Of course, we got a lot of news around that from a headcount perspective, but also from a prospects perspective around international expansion. So I think 13.7% is still generous considering the level of investment that they're making into the business. In terms of the GAAP net income at the very, very bottom line here, I am expecting 44 million to drop to the bottom line, and I'm expecting that at a 6.8% net income margin. So that obviously falls pretty in line with what the historical numbers have been that this business has reported, high single digit net income margins. And if we look at what that equates to in EPS, it equates to 20 cents of EPS. Of course, we know that analysts are expecting 15 cents of EPS, and my estimate is slightly higher than this. So I think that the company can do it. Of course, this would be a massive beat if they did manage to come in at 640 and at 20 cents of EPS. I think with regards to HIMS, I am overly optimistic, but I have reason to be because they've historically been traditionally beating a lot of their numbers by some big margins. Now, here are some other notes that I want to highlight here. So with regards to the earnings call commentary, I want management to announce testosterone officially. They made an Instagram post about this recently, and I think that this is the perfect time for management to officially announce that product line because they're now hinting at it. And they said that this was going to be a product line that they were going to announce towards the second half of this year. Similarly, I want them to talk about the progress on the liraglutide launch, and I want them to address the compounded semaglutide risks, given that now lawmakers are urging the FDA around cracking down on compounded semaglutide. And also, given that Novo Nordisk canceled that partnership with HIMS, I want management to tackle this head on and address it on the earnings call head first. I want them also to address the Zava acquisition and what their plans are with regards to international expansion in Europe, but also in Canada, which they announced recently. And in this earnings call as well, we will get what the Zava numbers are. My guess on the Zava acquisition would be that the acquisition cost is less than 300 million. So we'll get some clarity on how that looks and what they're planning to do there. And finally, number 4, I want them to address the Tribe Labs integration process and how that's going, because in previous earnings calls, they mentioned that they were planning to fully integrate by the end of this year. And I want to see the progress on the lab testing because that capability is going to be very bullish for strengthening that value proposition even further. And it's something that they've been teasing. I mean, they even announced it on their website. In terms of the stock performance, how the stock could react after the earnings, well, the thing you have to understand with HIMS is that there's massive volatility. There's also massive short interest. The short interest is very high. It's around 35%. In previous earnings calls, the implied move off of the back of earnings was plus minus 20%. And so this thing, it could be at $50 a share before earnings, and after earnings, it could be either at $70 a share or at $35 a share. Given that volatility and given that short interest, HIMS, like I've mentioned in previous videos before, is a battleground stock because of the high level of short interest and because of the amount of people that are betting either for or against this company. But keep in mind, it is a company that's putting up over 100% growth rates. And you have to ask yourselves, how long will that be sustainable for? The business is about $12, $13 billion. My guess is it's not going to be sustainable for very long. And I think that the stock can and probably will take a hit. The moment those growth rates start to pull back, even if they pull back to like 80% year over year, the stock will take a hit as a result of so much being priced into this movement and into the actual earnings report. So those are my earnings predictions for HIMS. Very curious to hear what you think. I will, of course, be covering HIMS earnings live along with several members in the HIMS community on my channel after the market closes on Monday, August 4th. Make sure to tune in for that. For right now, thank you so much for watching. Let me know your thoughts in the comments below, and I will see you on the earnings call in the next week.